Hey traders, welcome to the day after Thanksgiving. Charts and coffee, lots of coffee for sure. All right, let me make sure I'm in the Simpler Essentials room as well. Give me one moment. All right. Happy Friday, everyone. Hope everyone's doing well. Had a nice relaxing day, lots of football. F1 practice sessions are underway. We have the last race of the season, Abu Dhabi, happening this weekend. So good morning, good morning. All right. Good to see you all. All right. So, I'll give you all a little sneak. It's Friday. It's a half day. We're taking a look at a market when there is likely not going to be a lot of major decisions being made. End of the week, end of the month is next week. And so definitely just sort of, well, I'll see if there are any opportunities. We do have a 9:45 hot zone coming up. I will see if there's any day trades to be had. Probably not a lot of not a great day for a lot of active trading, but maybe if we get some early session moderate to conservative entries today, I might take them. Again, our day trading ends at midday at lunchtime, so not a lot of time for follow through. But ultimately, still a good time to get together with the traders, take a look at what we'll be dealing with next week. All right, so I'll give you a little sneak peek about the craziness that I get on this end of the. One day I'll reveal all the craziness that we get on this side with the comments. You all know how comments are, but I love this one. This one's full on Spanish, right? Delfino Rodriguez. Yeah. So Delfino, I do not have your money from Binance. And don't bother me here. You will be reported and blocked, and clearly you need help. Gang, that does remind me of one thing. And this happens a lot. I do get a lot of emails about this. There are folks out there who are pretending to be me. What I always find interesting is that whether it's Telegram, whether it's WhatsApp, whether it's a DM on Insta, or any of the other of the myriad of places that people can establish a hack account of moi. I think there's over 100 on TikTok. This is a great time to remind everybody, I will not ever DM you personally asking to manage your money. I don't have the time. I will never DM you asking to manage your crypto account, your Forex account, any account. I won't do it. And it's really hilarious to me because after these folks have been clearly scammed, which is awful, they somehow then find the real me to complain. So the real me is telling everyone, no one here at Simpler will ever ask to manage your money. We're certainly not going to hit you up on DM telling you that we can double your account in 10 days or whatever these scamsters are doing. It is awful. And let me let y'all on another little secret. There is no way to stop it. So I appreciate the reporting. I appreciate y'all doing what you can do. We cannot stop it. It would be a separate full-time job sitting around on every single platform. And X has made making reporting the scammers even harder than it was before. There's no way to stop it. Zero. So please, gang, heads up on that. And don't hit me up calling me names, Delfino, even in another language. Telling you can't get your money back. Wasn't me. All right, let's get to it, gang. Let's get to it. Let's see. Good morning. Yes, good morning. Day after turkey. Han says Max has had So for those of you that are not F1 fans, Max Verstappen has had the most dominant season I think anyone has had in F1, modern F1 anyway. Yeah, unbelievable season. That Singapore track, though, I'll tell you what, that Singapore track does give him fits, though, doesn't it, Hans? Otherwise, he would have just gone clean stretch into the second half of the year. We're watching Brawn right now on ESPN Plus. It's a documentary about the '08 or '09 season and this Brawn GP team. Very interesting. Really, really good. This is the kind of stuff we do so we don't get too active making bad decisions in illiquid markets. Productive distractions are key to trading. People say, Rog, what's one of the most important things you do? Aside probably from reading, yeah, productive distractions. Productive distractions. Yeah, absolutely. Keep us from making dumb mistakes. So we're going to have an illiquid session. You can see the NAS right now is sitting above 16,000 at the moment. But what will be very interesting, and this is exactly what we're going to do this morning. So take a peek here, gang. Take a peek, and we see the previous session close. And I'll just keep this blue line on my toss charts, and I'll just slide it on over to the close. And if we're going to have any chance of decent follow through in this obviously truncated trading session, and certainly lower volume, because let's face it, we're all on the interwebs, going broke, saving money with Black Friday. However, I'd be remiss if I did not mention that we have some incredible Black Friday sales going on right now at Simpler. And this is what I say to members, because I know most of you out there are members, right? YouTube, Twitter, my YouTube. If there is a service that, like a subscription service, like HPMRs, DPMRs, and Mastery, that you want to re-up, I think go to annual, whatever it is, take advantage of the Black Friday, okay? No doubt is a really, really, really good deal. Let's get to questions if y'all have any. 3 football games in Turkey is enough to wear anybody out. Let's go take a look at what's going on in the 10-year and in the long bond. And I've been talking a lot about the 10-year, the long bond, and the euro. In fact, I had a video on it. What was it? Bonds, dollar, and something, oh my. And I really wanted to emphasize something that I hope, as many traders are going into 2024, some huge lessons were learned. Every single year, we learn something new, right? Every single year, you're going to find as a trader, you say, wow, I've never seen the market respond like that before, or I've never seen the market ignore this facet of macro before. No 2 years are alike, gang. They're like fingerprints. Every single year, it's going to have a unique facet. However, one thing I can tell you, and one thing I hope a lot of traders will take away from this year, is a lot of the absolutely awful macroeconomic discussions that have been going on around yields. They have been as off the mark as they have not been students of history. Remember, gang, a lot of macroeconomics are patterns, are patterns in history. And if I look at the ZN, this is the 10-year, which tends to mostly be linked to the NASDAQ. So if 10-year yields are going higher, that tends to be bearish to the NAS. That's the thinking. That's the saying. So a lot of folks look at the TNX, things like that. So look at ZN. If ZN is heading lower, then based on this erroneous correlation, so too should the NAS. They look exactly the opposite. So what I'm hoping is a lot of folks going into next year are going to say, gosh, I've been listening to some really bad advice throughout the year, and it's kept me from taking advantage of being long because I've been waiting for the shoe to drop. And this is yet another reminder that equities don't have to move because of yields. Can you imagine, though, if yields stayed stable or went lower? Oh, gosh, yes, we probably would have seen an even more dramatic move higher on the NAS. But the NAS is making brand new highs in the year, gang. So by listening to fear-mongering and whatever yield curve inversion narratives out there, it would cost us money. So please keep that in mind. We never want to lock into correlations. That's not how they work. Take a look at the S&P knocking on the door to very close to brand new highs because XLK and XLF continue to march higher. Now let's stick with the F1 theme. Now we're firing off. Well, stick with the racing theme anyway. Now we're firing off on two cylinders within this S&P motor. And that means that if for whatever reason healthcare were to join in, which I am not holding my breath, gang, for many, many reasons, mostly being it has yet to establish itself above the 200. It is negative on the year. This is a place where if there's going to be tax loss harvesting, take a look at the individual stocks within the healthcare that are down on the year, that are in downtrends. So I'm not expecting participation from healthcare, but I'll tell you what, S&P doesn't need it. If tech continues to climb, XLK, if financials can join the party, they have, we're going to see more continuation in the S&P. Please, please, please don't be as bullish with the Dow nor the Russell. And the reason being is that any index that I'm looking at for a strong finish to the year is going to be one that's mostly moving with tech. So that's going to be XLC, that's going to be XLK, and then I'd keep an eye on SMH. Now, yes, I'm jumping right over consumer discretionary. Consumer discretionary does not look as strong as communications or tech, despite the fact that Amazon is a part of this conversation. The problem is names like this, the not so magnificent part of the seven, which is Tesla. Tesla's still a mess, gang, right? So, and then you have a lot of companies like Nike and Starbucks and non-tech names in consumer discretionary, despite the fact that Amazon's a number one weighted stock. XLY, consumer discretionary, is a quirky part of the weighting within the NASDAQ. But luckily for us as NASDAQ bulls, XLK and XLC are moving higher, and those two are the more heavy weighted sectors within it. So lots still to like as we go into the last trading month of the year, and certainly not a time to phone it in. This is going to be a very good finish to the year based on those relative performers. I'm not talking about bottom picking names like KRE and XLV. Let's focus on strength getting stronger. That's really window dressing, gang. Let's focus on weakness getting weaker. That is the tax loss harvesting. And then remember, gang, Santa doesn't kick in till nearly Christmas. So I hear a lot of folks asking about Santa rallies. Gang, Santa's not a month-long thing. It's actually a very small window that starts just before Christmas to just before New Year's. It's a very small window. And this year, I'll be looking, I'll show you right now with the calendar, I'll be looking for Santa around, here we go, let's go to the calendar, December 22 to about December 29. So that will be the window. If you think about just before Christmas and just before New Year, I cut the Santa rally window off before the end of the year, which will be 29 December, because the little bit of Santa rally that's credited to the first couple trading days of the new year is usually lower volume and retail traders buying at higher highs, because sadly, that's what typical retail traders do. And so we don't want to use that 1 or 2 days into the new year as part of the Santa rally. Lots to like, though. Lots to like. All right, let's get to the question, shall we? I think you got some questions. Y'all got some questions coming in. All right. Awesome. I just need a minor pullback in ES. Yeah, I tell you what, Tony, I would favor ES, XLK, XLF. I'd be a little bit hesitant on the Dow. Remember, the number one weighted sector in the Dow is XLF. But I'm with you. We need a pullback, and I'm with you in terms of S&P. No doubt, definitely high on my list. All right, Stonecastle, for swing trades on a daily or hourly chart in a trend, am I buying via limit order? Yes, or an alert. I love platform-based alerts. Stonecastle, one of the things I tell my members all the time is, while I love to trade and while I love to look at the markets, I don't want to have to feel like I have to actively babysit them. In other words, I don't want to be glued to a particular screen for fear that I'm going to miss my trigger price. I'm going to assign that duty to my charting platform, to my trading platform, and place an alert. So while I do like to use limit orders, I also, this is in addition, this doesn't supplant the limit order. This supplements the limit order, and I'll place an alert at a level, maybe 5 to 10 cents before my price trigger. So yes, I am buying with a limit, but using an alert. Will I use the wave or the daily price movement range? Stone, I'm slowly starting to bring in the wave, but most definitely the daily price movement range. Yes, you got it. As far as stops go, depends on the setup, my friend. All right, next up is Hans. I appreciate the question. I even more appreciate that you're an F1 fan, but you are not possibly asking me on November the 24th, 2023. You're not asking what's going to happen in 2024, are you? If you've been watching the show, gang, for any length of time, look, there's folks who trade and there's folks who like to analyze and prognosticate. I am not the latter. Hans, I have no idea what's going to happen. What I do know is currently in the data is that we are likely to see rate cuts. And what I do know probabilistically is that rate cuts tend to keep equities very favorable. In other words, they'll be going higher. I also note, again, from a data perspective, that the NASDAQ and the S&P are going higher, that key tech sectors and financials are moving higher, and those are clearly going to be places that will start the new year in a trend. I also know that Q1 is oftentimes a very popular time for bottom picking, right? So if there's a money manager out there saying, look, I don't want to put money to work at higher highs in QQQ, or in higher highs in Meta, where is it that I could get a disproportionate return on something that has 12 months to perform? Therefore, I can show this to my clients come year end 2024. And that's where a lot of times things like KRE and XLV might get a second glance, because now, rather than buying a stock in the penthouse, we're, relatively speaking, buying it in the basement. But Hans, let me add this too. Anyone who answers that question any differently than I just did is either delusional or cannot accept the fact that us mortals can't see the future. And I'm amazed how many folks will answer that with a confident, well, this is what's going to happen in 2024. And this is what I say. There's a race coming up this week. Well, Hans, Max is going to win. So you and I already know that. That's an easy probabilistic guess that Hans is going to win Abu Dhabi. But we have a lot of football games coming up, namely Dolphins and Jets at 3 p.m. today. So imagine my saying the Dolphins are going to win and this is going to be the score. That is what financial television does all day long, right? It's not realistic. It's meant to be entertainment. That's all that it's good for. Trust me on that. And I don't know who bots telling me, oh, you're rooting for the Jets. You're rooting for Gangrene. Yeah, well, I'm in Florida. I got to root for the Dolphins, but it should be a good game. But yeah, no clue what's going to happen. I don't even know what I'm having for dinner tonight. Oh no, I take that back. I do. We have some Snow's barbecue getting delivered today. Some ribs and brisket. So at least I know that. That's it. But there's no way we can look that far. However, let's look at the data. And we know that we're likely going to see continuation in certain sectors of these markets. But remember, first part of the year, things that are going to get window dressed, strength gets stronger in December, are likely to be temporarily unwound. So will I expect some weakness in tech come early next year? I actually will be looking for that. I'm not going to short it before we get a setup, but I will be looking for some of the, let's call it window undressing. Right? You put all the good stuff in the display window, but come the first few weeks of the year, some of that stuff's going to come out of the display window because money's going to get routed to places like healthcare and regional banks, likely, that are not punching up to higher highs right now, right? Does that make sense? Now, I appreciate the question, but let's remember, nobody knows that answer. All right, what's going on with crude oil? Rainy days, if you would have asked me, and I know I put this in TTO, top tier outlook, you would have asked me Q3, where do we want to keep looking to the upside? Long crude, long energy, until right in here, that fateful day right before Halloween, right? Trick or treat, crude oil said trick. And we are now below the 200. We are now in a downtrend. So I've got to focus on the downside. However, could crude oil USO, could XLE, could these be some of those names along with healthcare and regional banks that could look appealing early next year? They are right now. XLE has made a very, very important turn, not only below the 200, but below the being positive or negative on the year. And I think the last video that we had over at the Simpler Trading YouTube channel, I listed a lot about, actually, gang, I'm trying to bring up the clock and I got to wrap it up here. I listed a lot of the levels that I think are very important to have now on your chart. And one of them is, where do we start the year? What was the January 3 close on the stocks, sectors, and the indices that you're looking at? And where are we in relation to that close? Really, really important in terms of that. Let's see, what else do we have here before we wrap up? So yeah, rainy day. And we'll talk about it in the mastery rainy day. So this won't be the last time you hear me talk about it. We'll take a look at it here in just a few moments. I'll be in the room in just a sec. All right. So let's call it a morning. I will see you all on Sunday for our top tier outlook, and we will be very cautious today, right, gang? This is one of those open days of trading and sort of name only. We'll talk about the volume and an indicator that I use to look at comparative volume when we get into the mastery. How do we know that we're dealing with a lower than normal volume day? We'll take a look at how I do that as well. All right, gang, as always, I know it's not Thanksgiving anymore, but I'm very grateful for all of you. Thanks for tuning in to Charts and Coffee. I'm always going to keep it very, very real with you all, and with the hopes that you all can learn with a whole lot less blood, sweat, and tears than I did. So thank you as always for your time and questions. I'll talk with you soon.